Right, good afternoon everybody, and yeah, thanks for the opportunity to present an update on Arafura's Nolans project and share with you why we believe it's the right project with the right strategy and the right time. Not sure this is working. Just quickly, just note our standard disclosure there. But moving forward, there's obviously been a lot of activity in the rare earth space recently, over the last 6 months, and more particularly even over the last few days. In response to US tariffs, I think most of us here probably know the story. You know, China stopped rare earth exports for a while. Some of the car production facilities shut down as a result of that in various places. There are now the exports have resumed, but with extensive restrictions and conditions, and as a consequence of those actions, the fears around the real cost of not having a secure and diversified supply chain have come to realization. So we've seen the United States through the Department of War backing the Mountain Pass Rare Earth project. So like Japan, the US will now enjoy the benefits of an independent source of rare earths. So what that means in reality is that the remaining manufacturing powerhouses, for example Korea, Europe and particularly Germany, still remain heavily reliant on China-supplied rare earths. These shifts in trade dynamics have also resulted in a consensus to establish an independent benchmark NdPr price index, which is not opaque and subject to manipulation, which is going to be a key requisite for enabling rare earth production outside of China. And today, if you're caught up with the news, the Australian and US government announced a framework for securing critical minerals, mining, processing and supply framework. Oops, sorry. So, look, I expect everyone appreciates that these rare earth elements are really the linchpin of future-facing industries. You can't have wind turbines, EVs, robotics, defense systems, medical imaging equipment, etc. without rare earths. What's not so widely understood is the multiplying effect that for every dollar of NdPr, you enable around about $600 of end product value. So, as an example, if you take an EV on average worth around $47,000 US, the cost of NdPr that enables that production on that vehicle is around $75. You can't make the vehicle without the $75 worth of NdPr. So rare earths have a very strong demand. Demand is expected to at least double over the next decade, driven by EVs. The following decade will be driven by EVs and robotics, and the third decade will be led by robotics, with a forecast US $5 trillion industry by 2050. So there's not many other places where you have a commodity where you can see at least 3 decades of very strong underlying demand growth. Nope. With Arafura, our strategy has always been to go from mine to oxide. Not only do we think it's the right strategy at the right time, but we think it's a clear differentiator in rare earth projects. For us, it was always important to have mine supply locked in, as while it might take 2 to 5 years to develop separation capacity or metallization capability, it takes an average of 18 years to find a mine and bring it into commercial production. We've also gone all the way to an oxide as opposed to a concentrate or a carbonate, because we want to be able to bypass China for separation, and that has enabled us to take offtake agreements in place with end users and secure debt. The other reason we're going all the way to oxide is that it's only during the oxide separation step that you remove the radionuclides from the product. So if you're exporting a concentrate or a carbonate, you have a product that has elevated radiation levels. For Arafura, our ability to export the product without a lot of the issues around exporting radiation level product is extremely advantageous. Ensuring we don't have a stranded asset is another reason why we have adopted the mine to oxide strategy. And if you look across the projects in the development pipeline, there are only 3 that go all the way to oxide. We are the most advanced construction-ready auto-oxide project now globally. The other thing that I would point out here in this slide is that, as you can see, most of the projects are in the exploration phase. As we appreciate what's involved to move beyond exploration, permitting and approvals, engineering and mineralogy, it's hard to see too many projects moving into production in the next 5 to 10 years. Arafura started its journey way back in the early 2000s. So let me share with you some details about the Nolans project. Nolans sits on a very large ore body. It's open at depth to 400 meters, with the first 200 meters supporting a mine life of 38 years. Phase 1 will see us produce 4,440 tonnes of NdPr oxide, which supports production of approximately 4.5 million electric vehicles. In addition, we'll produce 570 tonnes of SEG heavy product, and importantly 144,000 tonnes of high-grade phosphoric acid. That's important because the acid byproduct puts us way down the bottom of the cost curve. We get byproduct credits. We use phosphoric acid in our processing, which means we don't have to buy it in, and we have we save significantly on reagent cost, as we don't have to neutralize the acid waste stream. You can see the Nolans project is just 135 kilometers north of Alice Springs, and we're right near existing infrastructure. We're just off the main Stuart Highway, which connects Darwin and Adelaide, and we're just off the main railway line, which also feeds those cities. We have the Amadeus gas pipeline that runs through the site and access to the infrastructure in Alice Springs, including an airport. Phase 2 of the project would see us lift our nameplate production capacity up to 10,000 tonnes of NdPr oxide, which would support the production of approximately 10 million EVs. Importantly, we envisage Phase 2 will see us becoming a processing hub that will enable other rare projects to get up at a fraction of the capital, supplying feed to our plant. We have all the we're construction ready. We have all the approvals that we need to commence construction in place. We spent 60 million on site activities in preparation for the main construction. As shown in the images here, we've got camp facilities to accommodate initial construction works. We have installed and commissioned 26 kilometres of water pipeline. We've had our bore fields tapped. We have 10 kilometres of roadway access across the site, and our engineering is very well advanced and mature. We've got a team in place that we need to deliver this project, and that includes our board, where we've added project construction and operational expertise. Our last step is funding. Once we secure a fully funded solution, we'll move immediately into main construction. We need to secure 1.8 billion, and we're nearly there. A year ago, we secured about half that amount in debt, including 280 million in completion support. So we've got an extensive war chest if we experience budget or schedule challenges. Right now, we're making very strong progress to secure 30% of the funding through strategic offtake and equity partners. Having a strong offtake party that's prepared to put in equity sends a strong signal to the investment community on the importance of a diversified and resilient supply chain. Earlier this year, we announced the National Reconstruction Fund investment of 200 million, and in the last couple of months, we've made announcements with respect to EFA and the German Raw Materials Fund potential investments. Earlier today, EFA have confirmed conditional approval of the US 100 million equity investment. Once our cornerstones are locked in, we will then go to market for the remaining 20%. In addition, US Exim have provided us with a letter of interest for up to $300 million of financing support. That was also announced today. So from an ESG perspective, and as a result of our international banking group, we're subject to several international standards. We're well positioned as a greenfield site. We see this as another differentiator, particularly when you consider China supplies 90% of supply today, and 40% of their inputs come from Myanmar, where environmental and human rights standards are starkly inconsistent with global customer expectations. So just as I finish here, I just want to summarize some key points. Nolan's sitting on a very large, high-grade, scalable resource. It's ready to go. It's the only construction-ready auto-oxide project globally. We will be in the first quartile of the cost curve, resilient to market cycles. We're making great progress on finalizing debt and funding, secured with high visibility across the equity component. And if you compare our market cap to existing producers, there's a significant difference in the multiple. As we address the funding and project risk execution, we see a substantial upside for our investors. Lastly, we see that environmental and more broadly our ESG performance will be a clear differentiator, making sure that we maintain our social license to deliver and long-term value to our partners and shareholders. So thank you for your time for that.